Welcome back to the channel, Crypto Trend Trader, with a quick market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, I want to get into this real quick. Obviously, markets are extremely volatile right now. There's a bunch of crazy stuff going on all around the world. I'm not going to talk politics. I'm not going to get into all that in this video. I may do another specific video about it. But essentially what we're looking at right now is Parabolic SAR on the daily. Our red resistance right here, we came all the way up to it, tried to flip it, got rejected, and came back down, found support on our short-term moving average. We're trying to get the move back up here to take out that SAR. That SAR is going to strengthen to the downside. So eventually one of two things is going to happen. We're going to take it out and flip this green, and it's going to tell us we're in a daily uptrend, or we're going to get rejected, and then finally it's going to sell off. And it's going to be very clear that, essentially like it acts as resistance and we get rejected down. At which point in time, you would expect us to come down to one of the key moving averages. In this case, first, it would be the yellow 21 at 92.50. And if that doesn't hold, you would expect us basically to come down to the 50 or 55 next, which would be at 87.50 or, basically this 85.50, support range, which was essentially like if we come back down here to this blue line, that's going to confirm this is basically a descending triangle, which is what we've been looking at, because you have like a high and then the same low, or a low, and then you have a lower high, and then you have like the same low basically, and then you have another lower high, and then essentially you would come down here to that blue support line and put in another same low, which would be very clearly be like a descending triangle forming, essentially, at which point in time you would expect like the measured move breakdown, etc. Now look, what you're seeing right now though on the Bellina Assassina is we're getting our daily buy signal right here. That's the daily buy signal. So that's telling us we're about to enter a long-term uptrend. But now here on the TJD TDMACD, now keep in mind also the last daily sell signal, first off, was at the absolute bottom. It was at the bottom of this move. That was a daily sell signal, and we took out the SAR right here and said we're going into a downtrend, and then we moved straight back up to it. So it was like a complete fake out on the SAR and the cross, okay? And then same thing right here. Last daily sell signal was at the absolute bottom. Last daily buy signal was at the absolute top. So these are fake outs. I mean, or like, the daily time frame is just not reliable right now, because every time we basically went into one of these trends is like the opposite happens, okay? And now here's the most important thing. This signature happens more often on shorter time frames, but it almost never ever happens on longer time frames. And again, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I'm not telling you what to do, okay? Because crypto's fundamentals have never been so strong. Gold fundamentals probably never been so strong. Hard assets probably never been so strong as right now. With all the generating of money and uncertainty in the world and, whatever, okay? But that being said, this signal right here doesn't happen very often on a daily, and when it does, let me put it this way. We flipped over the slope line on the TJD TDMACD on the daily. The histogram is underneath that, which normally what you would expect to happen is price action to come back up and this line still to be red, and then you would find resistance on the red line and then sell back off, and then eventually like create divergence, and then you could go back up, etc. But that's basically confirming a downtrend, the retest. But when you come back up from the bottom like this and it flips the slope back over blue, that almost never happens. So let's look back here for it to happen. We're looking for the histogram to be underneath this line, and then we want to see it go blue, red, blue. Okay, and then look, we got the buy signal at the same time on the daily. Now let's go back here and see. So here, this is what happens. We go underneath it, we come back up, fail the retest, sell off, and it stays red the whole time. That's what normally happens. This one doesn't count because it goes blue, but then the histogram never gets back above it, right? It doesn't get back above it. So you see the histogram right here. Let me go back to it. I'm doing a bad job explaining it. The histogram is above the slope line, so this one doesn't count, or above the zero line, so this one doesn't count. We want to see it above, come down below, and then come back up to it. So let's keep going. We'll find one. Ah, here we go. Here's one. So we're basically blue. We lose the slope. It goes red. And then we come back up and we retest. It turns blue before we get to it. We retest. And then we get a massive run up. And we get the buy signal right there. That's a nice move right there. And what was that at? That was at basically a triangle consolidation pattern when that played out. And it resulted in a 60% move. Which 60% move right now, you know what I mean, from $10,000. 16K? 14K possibly? I don't know. Let's keep going. Let's check the time before that when it happened. No, it's underneath here. Here's the other one. So 2 times. This is back now in the end of 2017, 2018. So it sells down underneath it. Lose the blue, it turns red. Comes back up to it, flips it back blue again. We get the buy signal on the daily. And then what is that? The absolute top. And then we sell back off. 64%. 64%. So, you know, that's 4,000. So realistically right now, 4,000 to 16,000 is probably the range. 60% in either direction. Realistically. So we'll see what happens right here. We got to see what happens. We're at a key pivot point in the market. And again, this is not financial advice. I'm not your financial advisor. I want to talk right now about risk reward and position sizing, okay? Say I have, just for simplicity, $100,000, okay? And say right here I put $50,000 long, or bought $50,000 in Bitcoin, and then I shorted $50,000. And then I put a 10% stop loss in on both of them. So the 10% stop loss would essentially be like the range. And I'm just throwing these numbers out here. I'm not saying do this or anything like that. I'm saying you pick whatever your validation range is to be in that direction, essentially. And then if price moves in that direction, if price drops all of a sudden, when it goes down and hits your stop loss, it takes out your spot position or whatever, and your short makes money the whole time. And then vice versa. If all of a sudden price pump right here, it would take your short out, and your short would get closed, and you would take a 10% loss, which would be offset completely by the 10% gain that you just made. And then, you know, price action shoots up and you make the other 50%. So that's how a lot of times you can essentially like trade a range or like a breakout of a range, but be positioned ahead of time. And those are all just arbitrary numbers, you know, essentially. I'm not saying like that's exactly what the range is or anything. But I mean, essentially, if you were saying like your invalidation points were going to be, you know, if you said your invalidation points were basically going to be the top here in orange and the bottom here in blue, and you say, okay, if we get a confirmed candle close on a daily outside of that range, we clearly have broken out of the range. You know what I mean? So, you know, essentially, if you're taking a trade from in the middle of the range, you have a 7.5% to the downside. You know, I just guessed that was roughly 7.5%. I don't know. I just guessed that was the middle. Yeah, about 7.5% to the upside. So if you take a trade off of the 21 moving average on the daily at 92.81, let's say we got a test down here to 92.81, and you bought 1 Bitcoin, and at the same time you shorted 1 Bitcoin, and you had, you know, let's say, like we said, 10%, just to be liberal with it. You had a 10% stop loss, maybe not even a hard stop in the books, but just you said, okay, if it moves 10% in that direction, breaks out of this range, and gets a confirmed candle close, you know, I'm going to go ahead, and if it goes to the upside, I'll close my short out, and if it goes to the downside, you know, I'm going to go ahead and sell my Bitcoin, and I'll buy it back cheaper, you know, assuming that we're going to get a measure move breakout of this pattern. then essentially you now are able to make on that, and again, it doesn't have to be, those numbers don't have to be exact. Maybe we don't get that 60% move. Maybe we don't come back up here and retest. But I suspect if we broke out of this range and got a confirmed candle close in one direction or another, I think it's very likely that we would break through this and then we would come up here, and essentially test like 12, 13,000 right away. So that's still like a, 20, 30% move. And then vice versa to the downside, if you break out of this range and get the measured move of this, it's essentially already drawn right here. But, down to 7,000 is like, immediately like a 30% move basically. So, so even if you took the 7.5% stop loss and you said, 20 to 30%, you're still looking at like, over a 3-to-1 risk to reward ratio. So, and again, this is not financial advice. I'm basically just explaining like the situation, how as I see it currently, and then also like how that relates to, a trend potentially breakout to the upside or downside, and how like you could literally be impartial on price action and still make money whichever way it breaks out. And a lot of times you'll have a much tighter range than this. This is a very broad range, like 15%. A lot of times you'll have a much tighter range and okay, if this, then that, if this, then that. And it's the same type of thing where if you did the same thing with like moving average crosses or whatever, you could trade moving average crosses and essentially, you buy in when you get the confirmed candle close above here, and then look, it spurts up, comes back down. As long as you don't get taken out of that trade right there, you get to enjoy this whole move up here. And then look, you almost confirm it right here, but you never actually do. So you're still in this trade until it crosses back over. So in all reality, like, if you just lay down an if this then that scenario, it doesn't matter which strategy you're using, as long as you're consistent and you can look back and see like that this is a good strategy and works. Because that's all you got to do to go back and back test it. I mean, if it just like crosses back over like this all the time, if you're just in like a mass ranging market, that's not going to work in the same way. Like if you try to trade like the wrong time frame on basically like US stocks, like over the last few years, all they did was essentially like range sideways, for quite a long time. So if you were essentially trying to trade moving average crosses through all this, I mean, you're not getting anywhere. You're getting like basically like dancing around here, and it's just range trading. So you can make profits on that, but then look, by the time it crossed back over, you're right back where you started, and then price action sells back off here, and then by the time it tells you to get back in, so it's not really going to work. I mean, it would have eventually worked, obviously, but for years you would have just been going sideways in like ranging market, or I guess in this case a year or so. And the same type of thing right here, as long as it works and you can look back and quantify it, it's great. But like if you were trading a moving average cross on like the weekly time frame right here, this is where the cross got confirmed. So the cross got confirmed right here. So when this candle closed right here, and then you said, oh, that's it, I'm going to sell, and then you sold, and then price action moved all the way back up for the retest. So that's why you have to be on the right time frame and look at the right, and that's 6%, but with the high leverage and everything on these markets. And then look, you essentially said, oh man, that's it, it's going back up. And then of course, like, buy or whatever in here, and then it just gets like absolutely crushed after that. So, you have to watch if you're using like a lagging indicator or oscillator as what time frame you're using, and make sure that it's actually like relevant to what's going on. So, but regardless, I just wanted to basically talk about like position sizing and everything. I mean, nothing's changed with how I sit as far as like technical analysis and everything. Fundamental analysis, yeah, like, it's just absolutely crazy right now. But to me, to tell you the truth, the reason it looks like silver and gold are selling out like crazy, and there's such a high markup right now over spot for like actual physical gold and silver. The reason I think that's the case is off ramps. I think people are struggling right now for off ramps, and that's what this is essentially about. Like the Fed and all this stuff has provided like liquidity like around the globe. The different federal reserves and banks and everything have provided like all this liquidity, and that's great and everything, but people need somewhere to put that. And if you're pumping out like a bunch of money, like actual cash or whatever, cash isn't necessarily the best place to put it at. So, and then also like, it's hard to just go and take like millions of dollars in cash out of a bank. And, what are you going to do? Just fill up briefcases? Like cash only comes in $100 bills. So, you don't actually like have that. So when it comes to like metals, gold, silver, stuff like that, gold specifically, you can buy one of those kilo bars or whatever. It's like, I think like, I don't know what it is, 56,000 or something like that they come out to right now, roughly. You buy one of those kilo bars and it literally weighs only a kilo. It's small, compact, and it's $60,000. So think about that. That's a store of value, like on a next level. Because if you just start like filling up like pallets full of cash, like what's going to happen? They're printing out trillions and trillions. Like next stimulus comes out, they might do another like 5-10 trillion before the year's done. And that just cuts your value of your money like basically substantially, as where in the meantime everybody else is rushing to get that gold. So that similar situation could happen, essentially with cryptocurrency and Bitcoin and everything. And I don't want you to like FOMO in all of a sudden because the fundamentals are strong, but essentially it's like off ramps. And we may not see in the future the same like unregulated easy ways to just move money from traditional sense into like the crypto sense. They're slowly like cracking down on all that like Bitcoin in-person transactions, like unregulated sales. All exchanges now like require KYC and have to release that KYC so they can track your like big dollars and tax money and all this stuff. And over time, as the government puts like more and more of these regulations into place, it's going to become more and more difficult, and that essentially like will create value. It'll essentially create value to the people that have like that unregulated good. So, if you got a couple Bitcoin on a, hard wallet somewhere or whatever, and you got into the game early, or you mined, or you OTC'd it so it's not traceable and your wallet's not registered, and maybe it went through a mixer, whatever the situation is, that's going to actually have a higher value than some Bitcoin that's been like transferred through exchanges with KYC that essentially will have like a stamp on that. And then who knows? Who knows how it's going to work out in the future and how everything's going to change. But the fact of the matter is that we're just at this point where there's just so many X factors right now. That's why we call it a hedge. That's why it's a hedge. It's a hedge just in case. Do I think Bitcoin and crypto and blockchain is going to succeed and be the future of money and all different kinds of like commerce and everything? Oh yeah, 100%. Definitely. But that could still take another 10 years or 25 years or whatever. And it might not even be Bitcoin. It might be something else because it's all open source. So a government or world order or whatever might pick it up. The future is very uncertain. But I would rather have that hedge than not. In the same way that the financial institutions probably not going to all tumble down from all this. Like, it seems crazy right now, and the stock market did crash, and everything seems wild, and it feels like the end of the world, but it always feels like the end of the world when something like this happens. When there's a war, or when you're directly affected by something, or this global pandemic, or, just this uncertainty or whatever, it's always going to feel like that. But the likelihood that the actual institution, like financial institution, global world order as we know it, like all this, like is going to crash down, and we're going to enter some Mad Max scenario, like very unlikely. But why not? Why not hedge yourself against that? And in many ways, that's what like the extreme version of buying gold, or buying Bitcoin, or buying ammunition, or buying, stocking up on food and water, or building a bunker, or whatever it is. You know what I mean? That's all the same situation. But it's essentially a hedge just in case it really does collapse. Just in case the food chain in the United States collapses. Maybe just get like, stock up on a little extra stuff. Fill up that freezer like with a little extra meat. get a little extra canned food, buy a little extra ammo. That's all it is. That's what these hedges are. And that's what the most important thing to understand is the difference between, proper position sizing, proper risk management, technical analysis, fundamental analysis, the difference between an investment, a trade, a hedge, and a lottery ticket. Because all these things are mixed up in one space and very confusing. But as soon as you can understand those things and identify them, you will exponentially do better in life and in markets, and your future will be directly correlated to your success in identifying those things, quantifying those things, and then moving towards your goals directly. Because once you can say to yourself, okay, for me, Bitcoin is a hedge. For me, Bitcoin is an investment. For me, this is a trade. For me, this is a lottery ticket. Like, that's fine. You can have lottery tickets. You know what I mean? If you love XRP and you want it, and that's your lottery ticket, or Cardano or TRX or whatever it is, that's fine. There's nothing wrong with that. People got all kinds of lottery tickets. You know what I mean? It's like collecting old baseball cards. Like, you're thinking, well, one day this can be worth something. One of them will be. Maybe not the whole collection. Whatever. That's lottery. That's fine. Do what you want to do. You want to collect like random little cryptocurrencies or stocks or whatever. That's totally cool. But understand that that's what it is. You're collecting something because you enjoy it. That's not your primary investment. You know what I mean? You're investing in something strong. You're buying something because you like it. You like the guy behind it. You like the marketing team. You like the name, the logo, whatever it is. You know what I mean? You like the fundamentals. And that's the difference. You identify all those things, quantify them, and you will be exponentially more successful because you can legitimately write down on a piece of paper, I'm buying this. I'm buying into Tesla because I think it's a good investment long term and will rise in value exponentially. Or I am buying Bitcoin because I think one day it will be a store of value, even though the white paper does not say that it's going to be a store of value, but the way it's designed is going to function that way over time. And that may, I'm not arguing against that one way or the other, but you're able to legitimately say those things, quantify them, and then say, I'm making decisions based on this. Because part of what happens, I think, to people is they get caught up in this fog, in this gray area, and this like whole swirl of emotions and like everything going on. And then they start making bad decisions, and then they look back and say, man, why did I even make that decision to begin with? I know that's a bad decision. And all they really had to do is just sit down and really like break it down and quantify it. So Deep Thoughts with Crypto Trend Trader was brought to you by no one, because I'm not a sellout. Love you guys. I'm out of here. Crypto Trend Trader, and I'm Audi 5000.